with us now for more is Aaron Sai, the consultant at First Metro Securities Incorporated. Good to see you, Aaron. Welcome back to the program.
Hi, good morning, Kathy. Thank you for having me here.
So what do you make of Megawide's preferred share listing today?
Well, basically, the new preferred share of Megawide is meant to a huge part of it is meant to refinance its retiring the MWB4 preferred share. So I think that could be still plan of the company to sustain what they have been doing in the past. So I think this is more in view of the recovery that they are seeing in their operations. Now we have seen the numbers improving actually in 2024, up from just 12 centavos EPS in 9 months 23 to 19 centavos to 2024. So we're still looking at the possibility of it improving as it reports full year earnings now for 2024. But as at least for the liquidity, current ratio is still above 1 times. Now it currently stands at 148. And I think the debt, the net debt to equity ratio is still positive. So I think that's still good for the company.
Yeah, we're still tracking the tenors and how they're trading in the first few minutes. But Cebu Landmaster reports tomorrow, Tuesday. What can we expect from them?
Well, Cebu Landmaster is still holds the leading being the leading developer in Vismin. I think the demand that their market is still showing is still indicative of growth. I think this is also the reason why developers in Metro Manila are diversifying away from the metro and going to CLI's territory. But as far as CLI is concerned, revenues for 2024 actually increased, although higher costs capped their profits to the rise measly 2.8% as of 9 months 24. But again, demand in that part of the country is still growing, better than what we're seeing in Metro Manila. But if competition continues to pour in those areas, then that might be challenged. But we're not seeing that yet now.
All right, to the broader markets now, swings in the treasuries and the dollar in just the past week have led some to question the safe haven status of the U.S. government. What are you now advising clients when it comes to the PSEI and the peso?
Well, the conflicting signal from the weakening dollar and the rising US 10-year make forecasting the peso against a dollar and consequently the PSEI a little bit more challenging. Now the peso is appreciating more because of the US the weakness in the US dollar. So that should be good for the PSAI historically. However, if the benchmark US 10 yield continue to rise, then the discount rate may become elevated, and that can pull valuation in equities market lower. So I think for now, looking at the charts of the PSEI, we're sitting at around we bounced recently. We bounced at around the 5,800 support. For me, the line in the sand is really the 5,700. This has been a multi-year support for the PSEI, and we have been trading within the 5.7 to 7.5 to 7.6 area. If the risks continues to abound moving forward, especially if there are more surprises from the macro front, and that can produce a lot more fear and a lot less valuation, especially for less safe havens, or emerging markets like ours. Then if we break below 5,700, then we might see some more pain ahead, maybe around 5.4, or even lower. But for now, the prayer is definitely, hopefully, the strength in the Philippine peso against the US dollar can somehow inspire buying, at least from the currency appreciation.
Yeah, I like what you said about prayer with Holy Week coming up. Have a good Easter. Thank you so much. Aaron Sai of First Metro Securities.